Dave, it's wonderful to have you on Floor Talk today. Thanks for joining me.
Thanks for having me. I appreciate it very much.
So exciting day. Today, Curbline spun out of Site Centers, and you're here to mark that occasion. But tell me, what makes Curb unique, and why is there so much conviction on the opportunity?
It is a great day. I mean, it's great to be here and watch this happen, be present. But the reality is that a big company like Site Centers had a diversified portfolio. It was a conglomerate like most of our competitors. What's unique about Curbline is it only invests in one type of property, and that's convenience properties. So if you're an investor and you want to express a view that you agree with our opinion that convenience offer better returns, this is a way that you can express that view in one stock that's totally concentrated on one type of property.
And Dave, tell me, when did your team start investing in convenience properties, and what was the genesis of the idea?
Well, it's interesting. In 2019, we did a case study on everything we owned. And as you can imagine, if you're a real estate investor, you want to know where you've made the most money with the least amount of risk. And we decided that it was in convenience properties. So we bought our first one in Austin, Texas in 2019. And two things happened in the years following. Number one, COVID happened. As we all know, that means more people found the suburbs, more people are working from home, and society has shifted and really started to believe that convenience is an important part of their life. The second thing is that data analytics have become very, very robust with respect to real estate, because now landlords have geolocation phone data. So now landlords know where their customers are going and why, and that's made our conviction even more so. So as an example, you probably think when you go shopping, you think about going to the mall or going to Madison Avenue or going to the grocery store. That's a going shopping event. Our business is the opposite. We're all about buying real estate where you run errands. And running errands means you need that convenience. You need to be there for short trips. So about 2/3 of our customers are actually on our real estate less than 7 minutes. Those types of tenants that want that real estate really need to be along the curb line of suburban communities, and that's where we're buying real estate.
Now, Curb's been called a first mover in the convenience real estate sector. Since real estate is a mature industry, why is it that Curb is the first to aggressively scale in this asset class?
Well, if you think of real estate investing, there's a lot of families over hundreds of years, and they start to build and buy real estate in local markets. But for large institutions, for institutional capital to enter an asset class, there has to be math behind it. Convenience real estate is still owned more than 90% in the US by local owners, local families. For us to institutionalize this asset class, we had to have a reason for investors to believe that it would work. Having 5 years of operational history, having 5 years of experience buying this type of real estate, and having the data analytics really compels us to be able to prove that this business has a lot of legs.
Finally, Dave, many companies access the public markets with a need for capital. Curb, on the other hand, has no debt and significant cash. Why is this strategically important?
Well, I always say it's great to have a great idea, but if you have a great idea and no money, you're always looking to your investors for more equity a little bit too early in your company's history. So we structured our balance sheet and the confidence in our balance sheet to also match our confidence in our strategy. Those two things together make a huge difference. We right now have the largest portfolio in the United States of this type of high quality convenience real estate, but we're 1/4% of the total US inventory, which means there's a lot of runway ahead of us. So in order to achieve that runway and really dominate the sector, we needed the capital on our balance sheet to make sure that we can grow. So as a REIT, to go public with no debt and $800 million in cash gives us a huge advantage on continuing to dominate the sector.
All right, well, Dave, it's been wonderful to talk with you. Congratulations on Curb.
Thank you, Judy. It's great seeing you. Thank you.